a very strong year from a lot of aspects. It was a strong year in the sense of our current returns were very high. We were able to maintain our surplus at a very high level, which again gives us a cushion against future downturns. And enabled us to improve benefits to members. And we took a number of steps to ensure sustainability of the fund going forward in the sense of investing in personnel systems and physical location that's going to enable us to continue our growth successfully going forward. The fund actually had quite a strong year from an investment performance point of view. So for 2017, our investment return was 10.88%. That brings our compounded 10-year return to 9.55%. HOOPP actually has one of the highest returns of any pension plan globally over the last 10 years. And that brings the total assets of the fund to stand at $77.8 billion, which is up $7.5 billion year over year. And even though we've improved benefits, our funded status remains strong at 122%. That means that for every dollar of current and future pension payments we have to make, we have $1.22 on hand. So we have a significant cushion to protect the fund in case of big shocks to the financial markets, like we experienced in 2008. HOOPP's done quite well for the last decade, and because of that, we now find ourselves in a position where we have a significant surplus. And what that's enabled us to do is actually improve benefits to the members. And so there's really three things we were able to do. The first improvement, and probably the most important one, we improved the payout formula for active members who have serviced before January 1st, 2018. Members will receive 1.75% up to the yearly maximum pensionable earnings instead of 1.5%. That's for each year of contributory service before January 1st, 2018, and that's a meaningful improvement for those members. The second thing we've been able to improve is survivor benefits. In the past, the minimum a spouse would receive when a member passes away is 60% of their pension. We've been able to increase that to 2/3 of their pension, and we've added a 5-year minimum guarantee. So if a member passes away anytime in the first 5 years after retiring, the spouse will get their full benefit for the rest of the 5 years, and after that, the spouse receives the survivor benefit for the rest of their life. And the third improvement is how we calculate the lifetime pension benefit. We changed the method for calculating the members' yearly maximum pension earnings, which results in an improvement in the initial benefit for members. We are a very long-term investor, and when you think about a healthcare worker coming into the plan today, they might be 25 years old, where we're collecting contributions from them. It may result in benefits being paid to them when they're 95. So, we have a very long-term time horizon. So, we have to think of things in that context. We're trying to put HOOPP members first, and we want to make sure we can pay pensions at any time. So, at any point in the economic cycle. So, we invest in such a way to make sure that we have a good trade-off between risk and return. So we need to earn enough return to make sure you can meet that obligation. We don't want to take too much risk to result in big drawdowns. So again, we spend a lot of time on risk management and making sure we strike that right balance of earning enough return for the members, but not exposing to risk of drawdowns. Last year we actually moved into a new location because we actually outgrown our previous location, and we actually own this building. So the building is at 1 York Street, and 1 York Street is was built to very high environmental standards. So it's actually a LEED Platinum building. It's actually the highest rated building in Canada from an environmental point of view. It's a big improvement in our workspace, and it actually gives us room to grow for the next 20 years. Has our ability to pay pensions improved? And this year it has. So, and again, that was a success. And there's some non-financial factors you can take into account in terms of success as well. I think we've continued to improve our ability to service the members going forward and to sustain that ability going forward. So we continually invested back into the business and improved our systems, improved our ability to meet that promise going forward.